Today I'm going to be going over the analysis of GNUS. I'm going to explain exactly why I think this is a terrible stock to own and why you should sell right away. So if you want to understand the full analysis, make sure you stay till the end of the video. Welcome back to a new video. As always, if you enjoyed the content, make sure to leave a like and subscribe. So as I mentioned, we're going to be analyzing all the financials on the stock GNUS, and the reason why I decided to make this video is because I don't know if you guys, but me personally, I've seen a ton of posts about GNUS stock in the last couple of days in all the Facebook group chats and everything that I'm in, and I feel that having a little bit more experience, I feel the need to make an analysis on this stock, and hopefully we can save people some money by showing them and explaining exactly what this company is and why it's a pretty bad company, because I feel like most people who are trading and investing in this company don't fully understand exactly what it is that they're investing in. So hopefully if you watch this video, you're able to understand a little bit why this company is not really good. So we're going to go ahead and start off by explaining some of the financials of GNUS brand, and the first aspect that we're going to go ahead and look at is the sales and revenue that we can see right here. We can see that this gives us the previous 5 years, starting from 2015 all the way to 2019, and the first thing, like I said, we're going to look at is the sales and revenue, and we can see there really isn't a clear exponential growth in sales. It's kind of all over the place. See, 2015 was 907,000, then drops to 866,000, then has a big jump to 5.34 million, but then once again a huge drop and then a big jump again. So really we can't really from an investing standpoint, you really don't want to invest in something that's not exponentially growing in sales. And what's even more shocking is if we go down here and look at their actual profit for all these years and all the sales, is that they actually aren't making any profit, pre-tax income right here. So on 2015 they had a loss of 348 million, 2016 6.21 million, and the 2017, the year that they actually had 5 million in sales, they still lost money. They're at 4.91 million. 2018 or 2017 right here, no, this is 2018, they're 9 million. 2019 they're down close to 12 million. And so unlike the sales and revenue, we can clearly see a pattern right here, a continuous increase in the amount of money that they're losing per year. So we can only expect that they're going to be continuing to lose more and more money just because the trend is continuous. And over here we can see that another red flag in the company is the amount of basic shares outstanding. And so that basically means is how many GNUS shares are out in the market. And we can see that each year that number keeps increasing. 2015 we were at 2.5 million, 2016 we're at 3.92 million, 2017 6 million, 18 8 million, and 19 close to 12 million shares. And the reason why this is a red flag is because they're just issuing more and more shares, and what that basically does is means that every time they issue more shares, the previous shares they lose value because there's more and more shares of the company available to the market. And the reason why they have to issue more shares is because they don't have enough equity in the company to be able to get loans, and I'm gonna go ahead and explain that in a little bit. But in my opinion, I think that if they do want to possibly expand, they're gonna have to issue more and more shares, just because they don't have the necessary requirements to get a good loan. And so what that's going to do is it's just going to devalue the shares that are currently out in the market. And so now that we've explained that, we're going to go ahead and look at the profile right here, which shows us some more red flags. We can go ahead and load this. And here we can see a little bit more information on GNUS. And so at a glance, we can see that for previous part that last year they lost close to 12 million. But what we have to focus here is on the debt to equity, which is right here. And this is what I was talking about, the reason why they have to issue out new shares in order to generate more money in order to work on new projects, is because their total debt to equity is insanely high. It's 106.02. So that basically means that if they want to take out loans, most banks are going to deny them, or they're going to give them a loan but at a really high interest rate, and that's going to eat into their profits. And so they to start off, they really don't make profits. And so now if they want to try to take out a loan, that the huge interest rates that they have is going to mean that they're either going to have to get lucky and have a really good return on that loan, or it's just going to make them lose even more money that they're already losing. And so overall, there's all these red flags, but I think what one of the most red flags is, if we go ahead and look at their actual website, we can see that they actually partnered with Warren Buffett to make this show. I'm not too familiar with the show because I don't really follow this brand. But if you have a well-known investor partnering with you, but that investor doesn't even have any shares of your stock, we can go ahead right here. This is the Warren Buffett portfolio. It shows all the shares and how much he has. We go ahead and down and look at the G, it says Global General Goldman, but we don't see any GNUS brand. And so that makes you wonder, if you partner with one of the best investors to have ever lived, and he doesn't even want to own your stock, then that's a huge red flag. And so it really doesn't take a genius to be able to understand and look at the valuation and all of the numbers on the balance sheets of GNUS to be able to realize that this is a really bad company. And I really wouldn't be surprised if in the next 5 to 10 years this company ceases to exist, just because how bad the company is being run right now. But that's pretty much it for this video. I don't really want to make this too long, and I hope you guys learn something from this, and hopefully you guys sell if you can, because I know that it reached a high of close to $12. Right now it's at $5.13. So within these last, I think, 2 to 3 weeks, it jumped from like being under $1 all the way to 11.73, and now it's back to 5.13. But I definitely see this dropping lower in the future, just because as of right now, the current price does not is not a fair value to the numbers on their balance sheet. And once people start to realize that, this company is going to start to tank even lower. But hopefully you guys learned something, and if you guys did, make sure to leave a like and subscribe. I'll see you guys in the next one.